I like to take a look at things through the lens of history. And so when I make a chart of things, I like to look at it going back 50 or 100 years or even more if I can. And everything has been out of whack for this entire century. By the way, you were talking about the everything bubble. I like to call it the everything except gold and silver bubble. But it's also the Bernanke bubble, and we're in for the Bernanke bust. In the year just leading up to 2000, Alan Greenspan was afraid of the Y2K bug, actually. He thought that would shut down a bunch of computers. And so they created a bunch of liquidity in the final 3 months or so of 1999. And you see the NASDAQ just go vertical at the same time that Greenspan is manipulating. And he didn't know that's where the currency, the liquidity was going. And then the NASDAQ crashed, and he lowered interest rates way too low and held them there way too long to get the markets levitated again, to try and get the stock markets back up. And he accidentally created this giant real estate bubble that fell apart and devastated the world economy. And when it did, Ben Bernanke overreacted, and we are going to suffer. We're in the Bernanke bubble now. And people love bubbles, but this is going to come to an end. And when it does, it's going to hurt, because this was the greatest manipulation of the free market in history, except for things like the USSR and Mao's China, of course, where they didn't have a free market. They try to manipulate everything. One of the things that I've noticed is that whenever there's a manipulation, it stores up energy somewhere, and eventually the free market overwhelms that manipulation, and they lose control of it. And that's what's going to happen sometime within the next 2 years. And so I've been getting ready for it, and I'm grateful for the breather. I'm grateful that the markets aren't crashing yet, although they've been sort of scary lately, a little choppy. There's a lot more volatility than there was.
Oh, yeah. No, volatility's definitely picked up in equities. You got FANG stocks generally. I think the other day just reached 25% down for the month. It's been, I think, pretty much the bloodiest month for equities since October of 2008. Yeah, it's definitely it's time to, I think, kind of get on edge. I think people are realizing interest rates are rising. There's talks again of Europe has obviously gotten off of quantitative easing, and it's a question of whether or not Mario Draghi starts pushing up rates. But the one thing I want to bring up to you, Mike, and I find this fascinating, I know you look at a lot of data from your videos, and it's, again, you're mentioning PE ratios, all these fair value. I think it's very important to study these fundamentals and understand when enough are out of whack, it's usually time to get concerned. There is one really interesting chart, and I tweeted this out a little while ago, where it takes a comparison between commodities to the S&P 500. I think it's the S&P Commodities Index versus the S&P 500. And what they actually found is that with this simple ratio, we usually see commodities and their peaks at an 8 times valuation over that of equities. And then it usually comes down to a bottom of around 1-to-1. And right now we're sitting at about a 1-to-1 ratio. And it's the cheapest we've seen commodities to equities in 50 years, since the 70s. And you were mentioning that cycle that you were talking about earlier, about, again, these major cycles in commodities, kind of they call them super cycles or macro cycles. I'd love to hear what you think about that. I think more than anything, as much as I'm interested in seeing hopefully crypto become a hedge and store value in the long term, I think gold and silver are quite well positioned at studying those trends. I'm the same way. I like to swing trade, so I think it's very fascinating to see that we're that cheap compared to equities.
Yeah, it is. The commodities, though, in general, they've been in a bear market, though, for 2,000 years. Man gets better at building stuff and digging stuff up and punching holes in the ground, and oil comes slipping out. We just get better and better at it. Precious metals are not only commodities. So I'm bullish on all commodities, because I do think that we've hit a bottom. And I look at interest rates, and if you look at like the 30-year Treasury, there's a cycle to it. And the cycle is coming close to an end here, and interest rates can't go down forever. There will come a time, interest rates are determined by people's level of confidence and trust. They'll loan somebody currency at very low interest rates if they're absolutely confident that they're going to get it back, that things are going to go just fine. But if they're nervous about the economy and they're nervous about the borrower, in this case the United States Treasury, then they demand higher rates for that risk. And risk aversion is back in the markets. You can see it in the volatility index and such. Mm-hmm. So I'm bullish on commodities, but I am expecting a short-term deflation before, the world's central banks have shown their cards. They have two tools, and they're both hammers, and so everything has to look like a nail to them. One tool is interest rates, and the other tool is creation of currency. That's the only two things that central banks can do to manipulate the economy. And we've already got interest rates that are too low, and this is part of what has caused the bubble, and they're raising them way too late. If they, I don't like the interest rates should be set by the free market anyway. They shouldn't be. It should be set by investors and traders, not by the Federal Open Market Committee meeting once a month and manipulating the economy by manipulating the interest rate and the quantity of currency. But take a look at base currency for the United States or for the ECB or whatever, or the balance. People don't understand when somebody talks about the Federal Reserve's balance sheet or the European Central Bank's balance sheet. The balance sheet is the stuff. They counterfeit currency. They create a dollar that didn't exist, and then they buy something, and that's how it gets into circulation. Yep. So they counterfeit and they buy something, and now the dollar is in circulation. Yeah. But we promise to pay it back with interest because what they usually buy is a U.S. Treasury bond, mm-hmm. So they're buying an IOU, and the government now has the currency, but we promised to pay that. When we created the currency, bought that IOU, we promised to pay that dollar back plus $2 plus $1 of interest over a 30-year period, and the dollar to pay the interest does not exist yet, so you have to keep on going deeper and deeper in debt. The whole system is like totally insane when
you really understand it.
Yeah. Gold and silver are separate from all other commodities, though, because they're also money. Mm-hmm. And so they can take off in a different direction with the rest of commodities. If we have a short-term deflation, commodities will probably go down during the deflation. But, I think this is a very good buy point for commodities right here. They've been so beat up over the past several years, and the stock market has been everybody's darling, and it is so incredibly overvalued, as well as real estate and bonds. Also, there's always a recession around the corner sometime. Right now, we're in the second longest economic expansion in U.S. history, and the Congressional Budget Office is projecting that we won't have another recession until the year 2029. That's their projection. That's the next recession. And I believe it's February, this economic expansion will become the longest in history. It might be March or April, I can't remember, but we're very close to becoming, there's been somewhere between 47 and 53 recessions and economic expansions since the U.S. was established. And I've got a chart that lists all of the ones since 1843, I think it was. So it goes back to before the Civil War. I mean, there's 3 or 4 recessions on this chart that were before Lincoln was assassinated. So you got some serious data here, and you look at it and you just know that there's another one coming sometime soon. And then this is the longest bull market in stocks in history, and this is always there's a bear market that follows a bull market always. Mm-hmm. And so we know that it's going to happen, but this time everything is so interlinked, where a problem in China, and they are just way they've got government mandated bubbles that have been going on for a long, long time. And when their bubble pops, when the market overwhelms the government manipulation, it's going to be bad, and that will ripple around the world. The same thing, Australia. they really, in 2008, they did not see a recession.
Decline. Yep. They didn't see a
Yeah.
decline in housing prices or anything.
Right.
I saw it when I visited Sydney, and I just could not believe how many people became real estate developers overnight.
Right. Well, their real estate prices are starting to fall there recently over the past several months, and it looks like their bubble might be over. But things are so interconnected now that it doesn't have to happen here. And so that's one of the reasons I've just been using all of this time to accumulate as much gold, silver, and cryptos as I can. I also have some emergency food, and